This is Adam Olsen, Embark's accounting advisory national practice leader, and you're listening to Accounting Matters. We're back with part 3 of our special bonus series episodes, recapping the 2022 AICPA conference on current SEC and PCAOB developments. On our last episode, we talked a bit about where the SEC was focused, some of the highlights that the SEC staff raised during the conference, and today we're pivoting a bit to the standard setting side and recapping a bit what we heard from the FASB's end, particularly Rick Jones, the chairman of the FASB board, as well as other members of the FASB that spoke during the conference. I'm again welcoming back to the conversation Nicole Harger, a senior director in Embark's National Quality Group, to share her thoughts and kind of some of the highlights that she heard throughout the conference from the FASB so that we can provide that information to you. Nicole, welcome back.
Hey, thanks. Hey, we should do a special shout out to your fans that you met at the conference podcast.
That's right. We definitely had some folks visit. So Embark, was attending the conference, not only just to kind of hear the information, but also as a sponsor of the event this year. And so definitely had a great time meeting those folks that came by our table, just to hear from them a bit about what they do, the organizations. And yes, we did have some accounting matters listeners swing by the table. So it was great to speak to you guys as well. It's always fun to connect and just hear from people that are enjoying the podcast. So Thanks for stopping by. Thanks for reminding me of that. I forgot. It was a busy week there, so it was just trying to keep everything in mind.
It was busy. There was a lot to take in. There were some people there.
For sure. So let's go ahead and just jump right in then. So with the FASB, I think when they spoke on their panel, I think it was definitely, they were on trend, I would say, with the rest of the event, which was again around just the focus on investors, the focus on better decision-making information, and really just kind of giving the FASB's view on, one, how they take in or they solicit feedback, their process for, I think they spoke more like high level around their standard setting process and for trying to provide some clarity about how the current board is viewing decisions around where they tend to focus and why they're focusing on certain things. And then obviously they segued into more just their specific projects that they have going on right now, that are addressing some of the needs that were raised and things like that. So I think from just a high level, Nicole, I guess, what were some of your takeaways around maybe how they're engaging investors or others kind of into the standard setting process?
Yeah, so I actually thought it was really neat to hear them kind of talk about their agenda consultation process, I think is what they call it. And basically that is where they do seek feedback from accountants, from auditors, investors, on the FASB's agenda items. So they ask, hey, what should we work on? What problems are you seeing? What is your suggested solution? So I thought that was really great to hear that not only are they, they're wanting to solicit feedback from everybody and kind of get everybody's, all the different stakeholders' opinions on things that they need to be thinking about, what people are seeing in real time, and how to kind of work through those problems.
Yeah, no, I think that's a good point. I thought they did a really good job too, because I think for some people, I think if you have an audit background or a professional services background, and if you're probably more aware that the FASB is more accessible than they may otherwise appear to be. But I think for a lot of people in the audience that don't come from those backgrounds and maybe are preparers at different registrants and things like that, they may view the FASB as kind of this ivory tower standard setting body.
Yep.
And I think they did a great justice to them, basically trying to break down some of those barriers and really explaining that they are a collaborative group. And even went on to say is like they love hearing from not only the auditors and stuff, but registrants, preparers, investor groups, whatever, reaching directly out with them to discuss like issues or things that are top of mind, and they're always receptive to feedback. The agenda consultation thing was definitely something that the chairman was focused on when he put that out, and I know they do lots of different kind of outreach activities and programs. So really, I think that they are doing a good job of making sure that their focuses are centered on things that people do care about, and it's not just necessarily one body or one group, but they really try to pull in a mix of people when they're thinking about their current agenda and things that they want to focus on as far as projects are concerned. So I guess thinking about a variety of projects they have going on. I think there were some questions that some people had asked about just how they decide ultimately what ends up on their technical agenda, what doesn't end up on their technical agenda. What were some of your thoughts around how they kind of waver through that? Because I think, one thing they did cover, which was interesting as well, is, they almost reprioritized where their focus was when they were looking at their technical agenda, because there were certain projects that were on there that fell off that actually were kind of moving through. So one they highlighted was the goodwill impairment, kind of looking at the accounting for goodwill. Yep. And there was, it had gone through several stages of a project life cycle at that point, and then I think they ultimately came to the decision that they couldn't really justify the cost benefit or the reason for it, so they kind of scrapped that project. So I think for some people, if they remember, I think that was maybe a couple months ago or so when they decided to kind of yank that from their technical agenda. Some people were maybe asking why, but in their feedback, it was basically around there was still varying views on that, and so they do focus on what makes sense, what's achievable, and that there actually is a purpose for the projects that they include on their technical agenda. So I don't know if you had any thoughts around some of the comments they shared there or not.
Yeah, I mean, obviously when you touched on the fact that they're kind of thinking about what's top of mind for everybody. And another topic that we heard a lot about during the conference was around crypto assets. And they did talk about how that is a project that they are trying to move relatively quickly on, just given all of the disruption in that market right now.
Yeah. No, they mentioned for sure that we definitely have an episode focused specifically on crypto that we'll highlight in the conference, because that was another kind of trending topic that weaves its way through. But yeah, the FASB was quick to recognize too, just when you think about the pace of their standard setting, is they for sure want to do their due diligence and make sure that they are, a big focus was getting the scope right when they start a project, so that they know, that make sure that from the onset they've got that laid out correctly, so that all the other subsequent steps of the project and decisions that are made are meaningful. But also recognizing there are going to be times where there's certain topics or issues or whatever that come to surface where they may need to be more reactive. And so, the accounting for crypto assets is definitely one area where, we've seen that project move pretty quickly. They've made, several decisions. They've had several recurring meetings where that topic or that project topic has been discussed and things have been done. And so that is moving relatively quickly, I think, just given, a lot of the noise and concern around crypto assets, for sure. I know you and I actually talked a bit about, when we were talking about just the economic uncertainty and some of the comments that Paul Munter raised, around transparency. And then I think he even kind of went into the concept of disaggregation and being more, again, just coming back to that meaningful financial information, useful decision-making information for investors. I think the FASB, I think, is aligned on that as well, because they also have current projects that are focused specifically on disaggregation in particular areas where investors are interested. So can you kind of walk through, what the FASB shared as it relates to some of those ongoing disaggregation projects?
Yeah, so they touched on 3 current projects that they have all centered around disaggregation and transparency. The first project is focused on segment reporting, and this disclosure draft has actually already been issued, but the proposed standard would require additional disclosures on significant segment expenses, and then it would also require segment information to be provided more frequently and by more public companies. And then the second kind of project that they're working on is really focused on disaggregation of functional expenses. So think about your cost of sales and your SG&A. And so the project that they're working on specifically is to kind of break those into consistent natural categories, such as, employee compensation, depreciation, and amortization, for capitalizable amounts such as inventory. They would potentially disaggregate those costs by purchases or raw materials, and then potentially thinking about separate presentation or disclosure of selling expenses. And they did touch on that. That draft is expected hopefully in the first half of 2023. So certainly more to come on that. And then the third project they touched on was around disaggregation of income tax disclosure. So they want more disaggregation information within the rate rec, as well as providing disclosure requirements for taxes paid by jurisdiction. So specifically, public companies, at least what they're thinking about, would be required to disclose specific categories in their rate rec, as well as requiring additional disclosure for reconciling items using a 5% threshold. So on an interim basis, companies would be required to provide a qualitative disclosure that would result in significant year-to-date changes in the effective tax rate from prior annual reporting. And then for non-public companies, they would be required to provide qualitative disclosures about specific categories of reconciling items, and then in individual jurisdictions that result in significant differences between the statutory tax rate and the effective tax rate. And then in addition to that, all companies would be required to disclose on an interim and annual basis income taxes paid, disaggregated by federal, state, and foreign taxes. And then on an annual basis, having disclosures around your income taxes paid by jurisdiction using a 5% threshold.
Yeah, so just a lot of kind of breaking down the financial statements a bit more and really giving investors more transparency. And these were definitely three areas that I know were highlighted by the FTC. And then I think really just kind of showing that collaboration between the FTC as well as the FASB when they think about some of the priorities and making sure that they're being responsive to what are the needs of users of the financial statements. One other thing I know they touched a bit on was just around their kind of post-implementation reviews.
Yep.
So especially around like the major standards, right? So 606, 842, and CECL being kind of the big three, where they've been doing those post-implementation reviews. And so I think, what I would just add to that is, I do think it's great that they continue to do those. And I think what those have been able to achieve in doing those post-implementation reviews is just continuing to, make targeted improvements where there are needs that are identified just through application of the standard. And so I think it really just shows that they are, again, just being responsive. So kind of ties back to my comment where, the FASB wants to be viewed as accessible. And so as issues are identified in application of some of these standards and things that they release and issue that get finalized is, they aren't afraid to continue to improve those standards, through these post-implementation reviews or just feedback in general that's being solicited or just voluntarily provided. So for sure, for preparers, public or non-public, regardless, like weigh in on these things and share your feedback. Like we definitely would encourage people to be a part of the process, and I think that was echoed through that sentiment around their post-implementation review process.
Yep.
The only other thing I think that kind of stood out to me were just some of the other projects they had in mind, and some are maybe particular on some of their research agendas as well, that are kind of being worked through, or whether or not they'll go up for vote to the technical agenda. But one I know they touched on a bit was around software. I don't know if you remember, like just talking about just the existing models for software costs, and just thinking about when those original standards were created, and just kind of you've essentially got kind of two models. You've got like the internal use software model and all the capitalization rules there. And then you got a separate model if you intend to market or sell, the software, for accounting for that. So just, there was some sentiments as well that they're looking at that for sure around just given the way technology and the use of software has changed over time, does that still make sense? Is there a better answer there? And so just, again, I think it just shows that they're continuing to look at existing standards as well, and just maybe there's areas where improvement or more meaningful information can be provided through some changes to some of those existing standards. So I thought that was interesting as well, just like a revisit to some of those existing areas of guidance.
Yep.
Before we wrap, is there anything else that maybe stood out to you as related to the FASB or just kind of standard setting updates in general?
Yeah, so one thing, and it's not really specific to the FASB, but the IASB chair did spend a little bit of time talking about, conversion and between U.S. and international standards, and a little bit, went into a little bit of the collaborative nature that the different boards have, and, making sure that while we don't have true conversion, that they are kind of working collaboratively and sharing decisions that are being made across both boards.
Yeah, no, I think that's an important point. I mean, it's not a true priority of either of those boards to get 100% convergence on the standards, but we have seen convergence in recent standards, and even ones that have been issued even as of this year. So there was a recent standard that the FASB put out on supplier financing disclosures, and that standard aligned with a similar standard put out by the IASB. So I think that's also just a good thing to highlight, is that while differences will continue to exist and do exist, they are focused on trying to align the decision making information for people that report under IFRS and US GAAP, where it makes sense. So, well, I think that's a great spot to wrap for today, discussing kind of the FASB's priorities and, talking about their standard setting process. So Nicole, thanks again for sharing your insights and kind of recapping what you heard. Appreciate you joining me on this discussion.
Yeah, thanks.
Yeah, and thanks to our listeners for tuning in, and be sure to check out our next part in our kind of bonus episode series on the conference, where we'll talk a bit about cybersecurity and just some of the recent SEC proposal around cybersecurity disclosures and just the risk of cybersecurity that was shared in a panel discussion there. So looking forward to welcoming you all back on another episode of Accounting Matters.